In just one day, Lucid Motors stock took off, soaring by 27% without any clear catalysts in sight. This jaw-dropping move left investors scratching their heads and asking, what in the world is going on here? This company has been losing billions and burning tons of cash, and its stock has been in a downward spiral for years, which made the situation even more confusing. So why is this massive move happening? In this video, we'll try to answer this question, and we'll do this by walking you through the current state of Lucid Motors and exploring the potential catalysts that could have triggered this movement, as well as the company's positives and negatives, so that we can weigh the company's potential risks and rewards. By the end, you'll definitely have a clearer picture of whether this run is worth chasing. So don't miss out. Welcome back to PST Markets. Let's begin our video by discussing Lucid Motors' current state. The young EV company was founded in 2007 and currently offers only one model, a sedan called Lucid Air, which comes in different variations with different tech. The company's second model, the Lucid Gravity SUV, is expected to be released in late 2024. If I asked you what the most crucial metric for an automotive company is, you'd probably say the number of vehicles it produces and delivers. So let's take a look at Lucid's recent performance. In 2023, the company produced 8,428 vehicles and delivered 6,001 vehicles. Its trailing 12 months revenue is $695.8 million, and it saw a $2.6 billion loss on that. Its 2023 car deliveries represent just 0.5% of all the EVs sold in the United States, so being really small, Lucid can't be considered a notable player in the sector. So it might not surprise you that Lucid failed to grow at the same pace as the US EV market, which saw total sales increase by 46% in 2023, while Lucid's deliveries increased only by 37%. Now that you know all of this, you must be confused about why the stock surged when the company is doing so badly. 4 factors could have contributed to the stock's recent performance, and I'll discuss each of them in depth. First of all, the EV company recently inked a 3-year agreement with aluminum supplier Meiden Rolling for the supply of aluminum panels for its US Lucid manufacturing facilities. This is a big deal for Lucid since Meiden Rolling can produce about 460,000 tons of high-quality aluminum sheets per year, and the EV company expects this deal to enhance its production capacity. What's interesting is that Meiden Rolling is a state-owned subsidiary of the Saudi Arabia mining company. This leads us to the next catalyst that could have contributed to Lucid's rally, the company's partnership with Saudi Arabia. Saudi Arabia's public investment fund has been investing in Lucid for a long time. In fact, it has put in $5.4 billion in the company since 2018 and has become its largest shareholder with 60.2%. In addition to these huge investments, the Saudi Arabian government has also agreed to purchase 100,000 Lucid vehicles over a 10-year period. This partnership is Saudi Arabia's method of encouraging a shift to EVs in the country for a more sustainable future, and transitioning its economy from one that depends on consumption to one that depends on both consumption and production. It seems that Lucid is the company the kingdom chose to jumpstart its automotive industry. In fact, Lucid is currently building an EV manufacturing facility in Saudi Arabia, where it expects to ship 155,000 units each year to countries worldwide. Saudi Arabia also started encouraging its citizens to buy Lucid cars. Last July, citizens started renting EVs directly from Lucid. In 2024, multiple Saudi banks started offering financing options for people who want to buy Lucid vehicles, making owning luxurious electric cars a breeze. So far, so good for Lucid, but there's one more reason why people are betting on the EV company's success. It has to do with the next James Bond movie. We might not yet know who the next actor for the iconic character will be. Still, we have a better idea of what type of vehicle he may be driving thanks to Lucid CEO Peter Rawlinson, who hinted that we might see Bond driving a 100% electric vehicle in the next movie. Since Bond is a British character, you might expect the filmmakers to stick to having him drive a British Aston Martin vehicle, which was their top choice in more than half of the 25 existing films. But the new twist this time is that it'll be an electric Aston Martin vehicle powered by Lucid's supercar batteries and technology that was used in the company's flagship product, the Lucid Air Sapphire. This is part of the long-term strategic partnership Lucid started with Aston Martin last June. Lucid agreed to supply the British company with the electric powertrain technology present in the Air Sapphire, including its high-performance twin-motor unit and battery tech. the company was awarded supply contracts worth over $450 million. Following the partnership, Aston Martin said it would use Lucid's technology to help launch its first 100% electric model in 2025. So Peter Rawlinson hinted that Bond would use one of these upcoming cars. It's easy to see how this would be great news for Lucid investors, as the James Bond franchise has become one of the most successful franchises of all time, and Lucid contributing to it could boost EV sales for the company or open the doors for other traditional car companies investing in Lucid's EV technology. There's also the fact that the company is releasing its second model, the Lucid Gravity SUV, in late 2024 after delays, since it was originally supposed to be released in 2023. But this shouldn't be a big problem considering how complex it is to design and manufacture new models. Even Tesla delayed the launch of its Cybertruck several times. This is exciting for Lucid because the US is seeing a surging demand for luxury SUVs, as the US SUV market is expected to generate $275 billion in 2024, which could provide Lucid with a great opportunity for growth. However, there's another reason the stock could be going up: the possibility of a short squeeze. When you consider how badly Lucid is doing, knowing that 30.89% of its shares are in a short position shouldn't be too shocking. But this is an increase of 21.9% from a year ago, and an incredibly high level of short interest compared to the S&P 500 average of roughly 1.5%. You could say that this high level of short interest, along with a rapid price increase, makes it possible that short sellers could be closing out positions in Lucid stock, which adds extra buying pressure on the stock as investors attempt to cause a short squeeze to happen. With all of this in mind, is Lucid stock a golden investment opportunity at $3.37? While this recent run is impressive, and as we talked about, there is a lot coming up in the future for the company, there are still many negatives that should have you approach any investment decision regarding Lucid stock very cautiously. Investors' recent gains could be just trading gains rather than long-term investing profits. If this massive movement from Lucid stock tempts you to buy, you'd be buying shares from people who are eager to exit their positions at higher prices, and there's no guarantee that your shares will see a similar increase. Another thing that I find off-putting is the $1 million cash bonus Lucid announced for its product and chief engineer, Eric Bach, ahead of the launch of the company's newest product, the Lucid Gravity. You might think that a $1 million bonus is nothing for an EV company that lost $2.6 billion and keeps burning cash, but I'm wondering why Bach didn't just get that reward in the form of Lucid stocks. Put yourself in his place. If you really believed in the company, you'd ask for more equity. He might have declined a stock reward, knowing that nobody was buying the vehicle, which would make getting extra shares useless. Of course, this isn't certain, but it's still worth thinking about. Another thing that's worth considering is the tough competition Lucid is facing. Even if you put the market leader, Tesla, aside, Lucid needs to allocate significant resources in order to be able to compete with other automakers like GM and Ford, who each delivered over 70,000 EVs in 2023 compared to Lucid's 6,001. Lucid is planning to solve this problem by focusing on expansion. In addition to its Saudi Arabia facility, Lucid is expanding its main manufacturing facility at Casa Grande, Arizona, and once that's done sometime in 2024, the company will have an annual production capacity of 90,000 vehicles, up from a capacity of 34,000 in 2022. However, this focus on expansion will force the company to raise more capital, acquire more debt, or increase equity, resulting in shareholder dilution. So if you're an investor who's interested in buying this stock, you should approach it very carefully, and even prepare yourself for a bumpy ride in 2024 and beyond. Well, that is everything for now. What do you think? Is Lucid stock a good investment right now? Please let us know in the comments below. And if you haven't, please subscribe and leave a like for this video. Your support helps us continue our work. Thanks again for your support, and I will see you in the next one.